This week, we're going to talk about patterns and processes, how the former is certainly tempting, but it's the latter that's rewarding. So here we are in September. It's one of a number of times that arise on the calendar when the media and the pundits bring out their patterns, things like seasonality. There's some truth to things. There's some general things that can be gleaned from calendars. But the problem, like so many patterns, is they're not consistent enough to stick to. So I want to start with this, patterns. I hear it all the time. Hey, I've been watching this stock. It goes up, it goes down, it goes up, it goes down. Started my career with a company named Progressive Software. This was a stock that the brokerage I was working at was doing this themselves, even as professionals. And they were trading this thing. Here's what happens with patterns. And again, I've talked about this. You can have a 1,000,000,000% gain if you have 100% loss, all your trillions are gone. So with the pattern, yeah, they can hold for a minute, or they look like you can find one. I've written in the past about apophenia, looking and seeing patterns that aren't really there. You've heard plenty of times past performance is not indicative of future returns, and yet here we go. Hey, this has classically happened in September. Hey, I'm following this stock that does this. Sell in May, go away. All of these different things, which work until they don't. And when they don't, people get hurt. And so that's the first thing I guess I would highlight around patterns breaking is you can just lose a ton of money. The second thing though, and getting back into that process piece, is you develop bad habits. Some of the worst things that can happen to an investor is when they try to engage in things like sell in May, go away, get out in September, hey, I'm trading this pattern within this stock, and they work a few times because they think they found this golden ticket. There are no golden tickets. If everybody knew that any one of these things existed and acted on it, it wouldn't work anymore. That's how markets work. And yet, time and time again, we want to find that surefire way. We want to find a way to bring a little bit more certainty to what can be a very difficult thing. You've heard me say it, plenty of other people that have said something similar to volatility is a price you pay as an investor to make money in the markets. It's unavoidable, and there's no pattern that's going to help save you from that. Last year, for example, one started to develop that people were trying to trade where the market was rising at the end of the day after kind of a flat period of time. And so you saw people trying to trade this. You'll see it with sectors, that one sector will be hot one year and then it's the next. The pattern with respect to the market trading up at the end of the day has reversed this year. If you're trying to take that pattern, that thing you thought you saw working in 2020 and bringing it into 2021, you're getting your butt kicked. If you were buying up the hot tech sectors in some years past or energy, here again, they'll rotate and you'll see that that's the thing that's going to be weakest the next year. So again, come back to repeatable processes. The next thing I want to talk about is really where we're at in the economy today. To listen to the media talk about it, the market's about to crash, the economy's about to derail. The stats just don't bear it out, okay? Will there be a correction at some point? Sure, it's going to rain someday, probably unfortunately this weekend, but that doesn't make me a weatherman. We're up double off the March lows with little to no correction. Of course a correction is going to come down the pike again. But as again, I've told you in the past, very few drops become something bigger. And if you look at the fact that only about 20% of 5% drops become 10 and only about 20 of those become 50s, worrying about every 2 to 5% decline as a sign of the next bear market, statistically, from a process perspective, is going to get you burned. Know your facts, know your stats, and have a process, again, that is repeatable into the future. So where are we at in the economy right now? Well, again, the market's down a whopping 2% this month off its all-time highs that it hit in August. You'd think it's 20, the way some people are talking about things. But the reality is the market's doing quite well. So one of the charts Matt's going to pop up over my face just at this time is a nice slide from Goldman Sachs. It really shows a number of different indicators in the economy and where we sit, not only relative to what would be perceived kind of a historical average, but even vis-a-vis 2008, which I see a lot of people trying to analogize today back to the pre-crisis crash, which FYI they've been trying to do for the last 12 years unsuccessfully. And what you see is, yeah, there's some parts of the economy that are certainly stretched, but in general, And in particular, the consumer remains in very, very strong shape. The other thing that I bring up within the written part of the commentary, but I'll highlight here, is some great work out of the Research Center in Seattle looking at this Delta variant. This is the new theme of what's going to derail the economy. And these people have been spot on really since the pandemic started about patterns. And what most of their work shows, what we're already seeing in some other countries abroad, is that the Delta variant probably peaked sometime in late August, early September, and should be weakening. Good news, obviously, on a humanitarian level, but from an economic perspective, bodes well for not necessarily having to go to some of the draconian measures that we went through in 2020. Pulling it all together, what am I trying to help you with a little bit today? Mindsets. Mindsets are everything. Don't let your mind get tricked into trying to see patterns. Again, apophenia, word of the day. Instead, focus on a repeatable process. Work with a partner like 10 Capital that'll help you stay disciplined. It's that patience, it's that discipline, it's that humility that's going to get you paid over time. And again, the stats that we try to share through these weekly messages are there to help, again, strengthen that belief as opposed to just giving you the cliches you've heard plenty of times before to know why these processes will work more times than not. With that, thanks so much for joining. We'll see you soon.